Hello, welcome once again. Welcome to another episode of a walkthrough of a particular real estate metro. Uh, and Hello, my name is Siwin Yi from the Yi Real Estate Network. I've been a real estate investor for more than 30 years. And physically, I'm located here in the San Francisco Bay Area. And over the years, I have taken our real estate investors, our out-of-state real estate investors from all over the country, uh, mostly from California, right? And over the years, we have entered and exited many real estate markets. We specialize in turnkey, out-of-state, remote properties, cash flow properties in affordable markets. Basically, with 20 to 25% down payment, one can achieve positive cash flow on the turnkey properties our investors are buying from all over the country. So, all right, with that said, and we have, again, the only market we have not entered is in the way up there in Northeast area, in New England area, and also in the way up north by Pacific Northwest and the way up there, Minnesota, Wisconsin, somewhere. We have not, in Iowa, Nebraska, we have not entered those markets over the years. But we have entered Raleigh, Durham, Chapel Hill, North Carolina market for the past 25 years. So, and our organization, we are real estate matchmakers. What that means that we identify each investor's goals and objectives, what they want to accomplish, and we direct them to our network markets in those applicable locations in the U.S. So we can connect them with our network of turnkey providers in a particular market. All right. So that's it. So Raleigh is again, from a high level in the market that we have invested, we have taken hundreds of our real estate investors over the years to purchase cash flow properties in the so-called triangle area. Okay, so it's a very, very, very interesting market. All right, so without further ado, let me share the screen. I meant research triangle. So Raleigh is a very consistent market over years. It has been very, very affordable over the years. Is I could even call it like a high tech. Is like an Austin 2.0, if you will. What Austin, Texas has achieved in the past few years, kind of mirror what has the Silicon Valley did from many decades ago. So Raleigh's right behind Austin, in my opinion, in terms of a high-tech hub, if you will, with the research Triangle Park and the overall economy. So anyway, so without further ado, let's go over several metrics, all right, and in this area, in the Tri-Valley area. So let's go over the Redfin market data as we have gone over many areas in the U.S. so far. Let's go over the new listings, right? So new listings. Oh, by the way, the blue line indicates 2019 data, and the red line indicates 2020, right? And the orange line indicates 2021, and the black line indicates 2022, ending date August 21st. So without further ado, let's get started and let's go over the current scenario. The new listing is 664 listings over the past month, right? 664 listings in the past month, from July 25th to August 21st. And as we can see, the year-over-year listing is 5%, so kind of very, very close to 2021. A little bit higher, 5% higher listing than than the time it was last year. So, and if you look at the trend line for the past 4 years, is pretty similar. It's pretty consistent in terms of new listings year over year for the past 4 years. So that is a pretty consistent timeline. So that's the new listings. And let's look over, the next link we should go over is the active listings. Okay, active listings. Right, again, let's go over the year to date, which is August 21st, 2022. There are 5,032 active listings year to date, which is 14% higher than last year, year over year, because as you can see, last year on the orange line, right, is right below here, and so 14% more listings this year than last year, whereas last year, 2021, there were 32% active listings less than the prior year, 2020. So very interesting. And then before the pandemic, 2019, right here, there were 7,805 listings. And then from 2019 to 2020, which is the red line right here, so 2020, there were 15% less listings than the previous year, 2019. Then 2021, even less listings. So that's why we've seen a whole bunch of bidding wars and multiple offers occur in this very, very hot Raleigh, North Carolina market, right? So the trend line is increasing with respect to active listing, right? So it has been increasing for the past few months, ever since the interest rate has risen from, have doubled in rate hike from around 3% early this year to currently, fluctuate between 5 and 6%. So we are seeing the increasing trend line, but so this data does not tell you that much unless we look at pending sales. Out of this big active listing bucket, if you will, what has been the pending sale? That's the key, right? What's the actual transaction? How many of those homes were accepted? How many of those listings were accepted? So let's look at pending sale, right? This is critical. Pending sale, it indicates that that the house is under contract, is pending to close escrow. Not all of them going to close escrow, of course, but so the pending sale year to date this year is 454, giving a 1 month timeline. So in a year, it has decreased 17.25% year over year from last year, 2021, right? So that's pretty significant. However, if you look at the beginning of the year, there's a steady increase in pending sales, which is good, right? Which is a good sign during a low interest rate environment. But then when we reach April, when the interest rate in May, when the interest rate suddenly skyrocketed, we have seen, right? And the demand subsided because when the interest rate doubled from 3 to 6%, if you will, the people's payments has increased dramatically, more than 50%, right? And so therefore the affordability is lower, therefore less people are able to qualify to buy, and that resulted in the demand pullback. So when the demand pullback happened back in May, we are seeing less and less pending home sale. So we go into a downward trend, right? As we speak, ever since the spike has happened. So remains to be seen for the remainder of this year, September, for the fourth quarter of 2022, to see what the trending line is, all right? And then now the next thing is we are going to look at the price drops. Wow, no surprise, right? I mean, it's happening in every market. Now, price drop means percent of active listings with price drops, which is 9% for for the week, right? However, you have to multiply by the entire month, which is we're talking around 36% price drop. So this means that the seller are pricing their homes too high relative to the market price that the buyer wants to buy. So again, this it does not mean that the value of the homes are dropping. No, it's just the list price was listed at too high over the past few months. So the seller have to understand the reality of the market. So they are dropping their prices to meet the buyer's demand. All right. So yeah, this is a very significant in a way that even until August of this year, the Raleigh market sellers are still pricing their homes too high relative to the demand. So other markets that we analyzed recently, other part of the country, they have seen this trend line has decreased in the past 1 month or 2 months because the pricing by the seller has come down to a realistic level in other markets. So in the Raleigh market, we haven't seen that yet. So I expect, as I monitor this market in the next couple of months, this trend line is going to decrease, and the seller will market their houses appropriately based on what the buyers wants, right? So so it remains to be seen. All right. So next thing, let's look at medium sales price. This is very critical. Now, before we go over the details of it, the median sales price, let's look at the last 3 years from 2019 before the pandemic. In 2019, the median sale price of a home in Raleigh is $294,000. Now, that's a very low price. So a number of our out-of-state investors has purchased properties 3 years ago in 2019. So if they purchase an investment property, single-family home, for example, at $294,000, and it rents for, let's say, $1,800 at that time, and the investor put down 25% down payment at 4% interest rate, they should be able to achieve monthly positive cash flow. So the numbers make sense for a mom and pop risk investors from out of state or anywhere for that matter, even locally here in Raleigh, to buy a single family home investment property and expect to achieve a good yield, a good cap rate, a good rent to value ratio, which is 0.007%, multiplied by the purchase price equals whatever the monthly gross rent that should achieve positive cash flow based on 25% down payment on the financing on a very low rate. But now, well, before we go to now, from 29, let's look at the big picture. The people that bought, the primary home buyers, the risk investors that have purchased early on in this marketplace, they have made a windfall. Windfall, that means they have achieved very good wealth, equity, appreciation, however you want to call it. So let's go over what has been the appreciation year over year for the past 2 years. Right before the pandemic, like I said, 294. Then 2020, when the pandemic began, the house has increased 8% to 317,000. And then from 20, at the height of the pandemic, when the interest rate were around 3%, that created a massive amount of purchasing activity due to remote work and due to migration from more expensive markets into this affordable market here in Raleigh. So we are achieving massive multiple offers, 20, 30, 40 offers, and people bidding 10, 20, 30, 40% above asking. Remember those days, 1 to 2 years ago? So 317. Then and then of course, we have seen skyrocketing of prices in this market in Raleigh. So 2020, to 2021, 2023, 17, look at 2021. 18% increase in prices year over year from 2020 to 2021. This is massive. This is skyrocketing high prices when the supply is extremely limited at that time, and the demand is off the roof. When demand exceeds supply so much, and when we see a bidding war, people paying above asking, people not even, they're foregoing contingency, they're foregoing inspection report, all those kind of things. It's just a mad dash. Is amazing. Then is that over yet? Then from 2021 of August to the peak to around July July 2022, we have seen another insane 19% price increase year over year from 2021 to 2022. This is absolutely mind-boggling. From a low of 294 median sales price in 2019 before the pandemic to currently end date of August the 7th at the peak right at 449, from 294 to 449. I mean, I don't have my calculator in front of me, but this is massive historic appreciation in about 2.5 years time frame. This is historic. So let's hope for those of you that purchase in this market, you're not losing some most of the value. Only time will tell with the potential correction that's going on in this country. And I know every market is very different, right? There's no such thing as a national market, but remains to be seen whether the equity you have accumulated so far for those who bought here, whether you can keep your equity or maybe have a reduction of part of your equity. So that is a sort of a nervous situation at this time, right, to a lot of people. But anyway, all right, so very massive increase, amazing percentage. All right, now the next thing we need to go over is the let's go over the average sale to list ratio. All right, average sale to list ratio, that tells you based on the final purchase price is how much was it sold at the above asking or below asking. So that determines who has the negotiation leveraging power, if you will. So as you can see, the trend line, which is very steep drop currently, again, based on the affordability factor, based on the interest rate increase and the affordability factor just going out the window. So the final sales price based on the list price as of this month, August 21, is still 1.01. Still, the final offerings price are slightly above the ask price. So pretty interesting, right? But the trend has decreasing. Back in April, before the interest rate has risen, when interest rate were back then like 3% or whatever, back in April 18 and the end date May 15, only a few months ago, the average sale to list price is 1.06. That means is on the average it was sold at 6% above asking. So that tells me at this point, a few months ago, April, and even before April, we're still seeing multiple offers. How many? I don't know, 3 to 5 to maybe 10 offers per house. We're still seeing bidding war. We're still seeing skyrocketing of prices. However, as you can see, when interest rate has dropped significantly, we're seeing a downward trend in terms of the still selling at the above asking, so which is quite interesting. So what we expect to see down future, we don't know. I mean, This is a very interesting graph, right? There's an average sales to list ratio. And then let's look at another key metric I'm going to show you right now as we are concluding this video presentation is, as you know, the balanced market in real estate is 4 to 6 months, right, of inventory. That would be a balanced market. Now, anything less than 4 months is still a seller's market, and still could be a. Anyway, let's go over that. And that's the final metric we can go over. Month of supply, right? So let's click on the month of supply. So this year on this black line, again, the month of supply is 9.7 weeks of supply. So there's 4 weeks in a month. So 4 divided by 9 equals like 2 months, like 2.5 months supply of inventory. So what does it mean? This means there are still very much a seller's market. There are still lack of supply of inventory out there, even giving the moderate demand, right? So this tells me this market is still on an upward trajectory, and I do not see a significant drop in prices in this market for the short-term future. I do not see it, right? Maybe a slight reduction of asking price, maybe a 5% reduction of price asking by the seller. We don't know. So this market is not as severe as in other markets in other part of the country, where we have seen more inventory relative to the demand. So it's still a very much seller's market, as you can see, right? And if you compare 2.5 weeks of supply of inventory, if you compare 2021, right? 2021 is the orange color. In 2021, there were less than 2 months of inventory, right? The orange color is 2021. So that's why the prices have increased so much last year in the Raleigh market, because there are less than 2 months of inventory. So there's a lot of multiple offers and above asking price, and bidding will occur in 2021. So of course, in 2019, before the pandemic, there were like almost 4 months supply inventory in 2019 before the pandemic began. And then in 2020, there were 2 months supply inventory. Then 2021, year to date, is less than 2 months. And then currently, there are about 2.5 months. So this market is still strong, still is a very competitive market. In fact, I should go over one more metric as to medium days on the market, right? Tells you how fast a transaction has closed, which is 28 days. So pretty a decent time to transact, to medium days on the market, less than 30 days. So this is to me is a very strong market. If you look at, so let's get in back. Let's look at the big picture. Medium sales price now is at 438,000. So as a real estate investor, as a mom and pop real estate investor, it's very, very difficult to cash flow, because the median price of a single family home in Raleigh has increased so dramatically in the past 3 years. So even though the rent has skyrocketed everywhere, because a lot of people, because they cannot buy anymore due to the higher interest rate and the low affordability factor, they are relegating to the rental pool. So they are the renters in this market. There's a historic renters nation going on, obviously. So if you were to buy as an investor, as a mom and pop investor, if you buy at this sort of a peak market at 438K median sales price as of August 2022, even though the rent has skyrocketed in the past few years, we can make the argument that at $2,200 monthly rent, right? The rent to value ratio is not going to work. You need a $3,000 monthly rent to achieve a cash flow with a 25% down payment. Does that make sense? So the numbers does not make sense anymore for risk investors to buy for cash flow, at least inside Raleigh market. So my suggestion for you is to buy in the suburbs of Raleigh, right? Within a 50 to 75-mile radius of Raleigh, right? And you can buy further away, the houses are cheaper, so that you may achieve break even, but at investors at a mortgage rate of 6%, 6.2%, even a 25% down payment, you cannot cash flow on this price. You can cash flow way back in here at 294,000, maybe at 317,000, but since the skyrocketing of prices has achieved triple, quadruple digit in the past 2.5 years in Raleigh, and the rent has not increased correspondingly to the skyrocketing of prices. The rent is catching up, but not enough to achieve cash flow. So investor, like I said, buy in the suburb. You can't buy within the circle 30-mile radius or the Research Triangle Park. Forget it. Price is getting too high. So for homeowners out there, primary homeowners, if you like to live here because of the it's a fast moving market, great population growth, great job growth, with the high tech hub, as we said, as we speak, and we are seeing a lot of migration of people from Northeast, from New York, New Jersey, coming into this market. The migration of people from California, the high tech people are coming to work in the tech world, in the Research Triangle Park, in Durham, in Raleigh area. So this market will continue to thrive, but it's going through a little bit of correction. How much of a correction? Maybe 5% drop in prices, perhaps this year, maybe slightly more. I do not see a crash, right? And so that's my take on this. So if you are a renter in here in Raleigh area, if there's no need to wait because your rent, you have no control. Your rent could be raised. The landlords is raising their rents, so you are making a very high rental payment, $2,300 to rent a single family home, right? Why rent if you can afford to buy even at this higher interest rate? If you want to stay in this market, if you want to live here for the next 5 to 10 years or longer, buy for long term, then you should buy if you can afford it, right? If you can't afford it, then you have to wait longer until the market hopefully rebalance itself out. Okay, so for those individuals who are already purchased in this market in the past few years, enjoy your equity, enjoy your cash flow. For those investors, that is, if I were you, I would not panic. It's a buy and hold strategy for investors, right? 5 to 10 years or longer, and then live off the cash flow that you achieved because you bought at the low end in the previous year, not right now, right? You bought at the during the pandemic cycle, not right now. All right. Again, primary home buyers, if you can afford it, like I said, if you afford to pay 5.5 interest rate, then if you like the area, which is a very, very good area to live in, is a high quality of living. In Raleigh, has a lot of future growth with high tech and the very diversified economy as well. Okay, that's all I have to say. And if you receive a lot of value from this video, please click the like button and also click subscribe so I can increase the visibility of the YouTube channel. And finally, if you wish to learn more about our turnkey out-of-state cash flow off-market properties, just put your email into our website link below. To put your email on there, you can become a free member of our organization, so you can enter into our real estate community of members. We have several thousand members, free members. You have access to free educational content inside our website with our weekly newsletters about real opportunities out there in the marketplace, and you'll know the kind of business model and the turnkey system we promote for the past more than 20 years. for our real estate investors. Thank you so much. Have a nice day. To see you. Bye bye.